All right.
It's election day, right?
Yeah.
It's our favorite day of the year. And the
Yay.
obligatory reminder, as I'm sure you guys have done tonight, we're covering it live here on Tasty Live, the election on special, 7 Eastern, 6 Central time. Tom and Tony are hosting, of course. I'll be there, Victor, Vanetta, Julia, and a whole host of other guests. It's going to be a great time. But there's been a lot of emotion around the election. What's actually going to happen? What do each candidates really stand for? I care about this purely from the market's point of view in this conversation. What will each candidate do when they're in power? Now, assuming each candidate could wave a magic wand, it's worth considering how they plan on spending money and taxing us. We can do this by looking at a number of different bipartisan or even nonpartisan organizations that put out these estimates for voters every year. And being a little bit of a neurotic, I decided to go through and look at all the numbers myself. Places like the Tax Foundation or the Committee for a Responsible Federal Budget have estimated that Harris's proposals will increase the debt by about $4 trillion, and Trump's will increase it by around $7 trillion over the next decade. The Penn-Wharton budget model is slightly more conservative, saying that Harris's plan is about $1.2 trillion overall, while Trump's is about $5.8. It's the mix of spending and taxing and how we get there and who is impacted by it, perhaps, that should interest people the most. Harris's plan wants to do tax cuts for those under $400,000, expanding the income tax credit, expanding pre-K childcare, increased minimum wage, and it's going to cost about $7.6 trillion. One of the reasons why, with the market reaction yesterday after the Seltzer poll in Iowa, you could see the stocks were coming in, perhaps pricing in a higher odds of a Harris win, is because what she plans to do with the corporate tax rate. She'd like to increase that from 21 to 28%. She wants to increase the taxes on capital income. She wants to increase the net investment income tax. So there's a lot of money that would be coming back in the door. It's about $4.2 trillion. Trump, on the other hand, is less about the spending and more about just the cutting taxes. He wants to lower the corporate tax rate to 15% for domestic manufacturers. He wants to spend money on the border. He wants to exempt overtime income taxes, the wages, of course, that we've heard about. This is going to cost about $5.35 trillion. And when you add in the credits for first-time home buyers, his in vitro fertilization plans, which we've heard a lot about here on the trail in the past 2 weeks, the long-term care cost of everything will be about $10.4 trillion. So the 10 to 20% flat tariffs plus a 60% tariff across the board on everything from China will cost the average American about $4,000, generating about $2.7 trillion in revenue across the border. If he eliminates the Department of Education and strips the DHS and all these other agencies down, it's going to generate about $3.7 trillion in savings. So that's how you get to your $7.7 trillion number. But why do we care about this? Because who benefits the most depends on whose plans go into place. Under Harris's plan, according to the Institute on Taxation and Economic Policy, Harris's plan would generate $1,980 for the middle fifth of Americans, whereas those same group of people would have to pay $1,530 more. So on math alone, Trump's plan is a little bit more generous for the top and increases the debt by longer over the next decade. But that's if we have sweeps. So what was the point of doing all that math, Tom? Because the outcome that we're looking at today is ultimately that we're likely to see a divided Congress. If you're looking at betting markets or you're looking at polls, the outcome is for a Republican Senate and for a Democratic House, regardless of who wins the presidency. And as we've seen in the second half of Trump's term, and as we just saw in the second half of Biden's term, when you have gridlock, not much gets done. You basically continue along the path that you've been around. What path have we been on? Well, we've had a lot of continuing resolutions lately under the Mike Johnson-led Republican House and the Chuck Schumer-led Democratic Senate. So where did those resolutions even start from? They started under the Biden, Pelosi, Schumer Democratic trifecta. So under a Republican administration or a Democratic administration ruled by gridlock, what you will see are continuing resolutions built upon the Schumer, Pelosi, Biden spending plan. The government spending isn't going away regardless of who's the president. And that means recession is very unlikely in the near term. And so if you're thinking about placing trades on, is the economy going to crash? Is the market overpriced or valuations too high? You just have to look into the actual numbers here and say, no matter who wins, we're spending way more than we're taking in. And that's unlikely to lead to any negative economic outcome in the real term. And at the end of the day, it might not matter at all for markets who the next president of the United States is. So I'm going to light this piece of paper on fire because all this math over the past 24 hours seems to be for nothing except for winding myself up.
But that's a good thing, right? It's okay to be passionate about something.
Certainly not the Mets, Knicks, or Jets, especially not the Jets. Can't be passionate about them.
No, you can't.
Bad for the
You're
heart,
right there.
bad for the brain. But I'm looking at this right now, and I don't see, tonight's going to be obviously a lot of fun. We're going to declare the election results at the end of the unspecial. We have, I think, Tom, as a Democrat, you get those marching orders in the mail about 3 weeks before everyone votes. And, outside of that, though, it's going to be a night of great volatility. The timing of the polls closing matters, too. Nebraska is perhaps the one to watch because without Arizona and Nevada, without North Carolina, this race could be decided by around 10 p.m. Eastern time, depending on how it all shakes out. So this may not be a long night as long as we get to a place where the Midwest breaks all in a certain direction. So if it's breaking for Trump, this race is over by 10 p.m. Eastern. If Pennsylvania goes for Trump, it's over by 10 p.m. Eastern. If not, we got to wait for Nebraska. And if Nebraska's first district comes in for Harris, you could have a 270 to 268 electoral college split. And that's a whole other can of worms that we can talk about for how markets behave over the next few weeks. But tonight will be a lot of two-way volatility given the poll closing times in the swing states.
I love the
What do you think about this, Sadnov?
I love the way you put that all together, but what I find most entertaining about it is, again, even if you knew the results of Pennsylvania and Nebraska right now, I don't know what you would do. S&Ps are up 30 right now. Like, I'm not sure you could tell me if I gave you the results, what are you going to do?
If you gave me the results, I think I could make a compelling case to do something. If it's a resounding Harris win, I think you're going to see volatility disappear. If it's a Trump win by a small margin or large margin, you're going to see volatility disappear. If it's a very, very close race, given what happened in 2020 and 2021, there could be lawsuits that draw this out, that delay any certification of the race, that keeps volatility sticking around for a little bit longer. But if Trump wins or it's a wide enough margin for Harris, I think the uncertainty dissipates right away and the volatility crush comes, as we've seen almost every single election year going back to the Great Depression. November and December tend to be very, very good because vol gets absolutely obliterated once the politics disappear from the radar.
There is
the market's already showing you that it doesn't care one way or the other.
I agree with Tony. The last 2 days, this is very
volatility down 6 or 7% in the last couple of days. Your scenario is a fun one and a good one. And ultimately, I'm sure there will be market movement, but it looks like business as usual, regardless of who wins. And they may even be, discounting this as a non-event. That's what it looks like to me.
I mean,
VIX 1D is only at 12.55. I mean, I think that's the fair read through, right? We had a bigger VIX 1D at the close on Thursday heading into non-farm payrolls.
Sure.
The market's basically saying that whatever happens tonight, keep calm and carry on.
I feel like the market was a lot more nervous. This actually makes sense to me, what's happening right now. And I feel like the market was, just like you said, was a lot more nervous a week ago. And the last 2 days, they've sucked a lot of vol out of here. And it seems like everybody's almost tired of it, wants to get it over with. And I think
so we can get back to business as usual. So we can get back to just, building businesses and stop the
I just don't think that I don't think either candidate is going to have a profound effect on the stock market. And there'll be individual cases where I think there'll be there's no question to me, there'll be individual cases of certain sectors and certain underlyings that will have, certain reactions that are probably a little more positive than others, depending on the candidate. But for the most part, the broad market, I just don't see a big reaction. I think the play remains. You have to kind of be a contrarian wherever they end up today. Just take the other side, but who knows? We'll see. I don't think all the numbers you read, I'm not going to argue any of them because I don't even care. Like that's all old. That's all old news. I mean, that's what's been floating around now for months. It's not, I don't know how that would not change the way I trade. Let's put it that way.
Of course not. And one of the other things I think it's worth discussing here, and I've previously mentioned how people shouldn't put politicians on pedestals for,
I don't think we put politicians on pedestals anymore. I think that's That is
that was not an accusation, sir. I know you do not, but also the conventional wisdom about like what sectors do well under what type of regimes. I think the conventional wisdom out there is that when a Democrat's in office, it's going to be really bad for energy and good for big tech, and vice versa when a Republican's in office. In 2017, the top performing sector in the market was information technology. It was also the top performing sector in 2019 and 2020. The top performing sector in 2021 and 2022 was energy. So tech, Silicon Valley, the Democrat-friendly stuff out of San Francisco, did really, really well under President Trump. And those good old boys in Houston who are pulling liquid gold out of the ground, they did great under Biden. So it's not necessarily about who's in office and the cultural attachments that we have to these various sectors. You have to look into the actual spending plans, where the money's going, where the geopolitics are heading. But more importantly, as traders, stepping back from it, this is stuff that we really shouldn't care about. Political cycles last years, macro cycles last years. Does this impact our 45 in, 21 day out typical tasty cycle? Maybe today because it's election day, but once we get through the next few days, I think Tony's right. This is a market that looks like it wants to get back to business as usual. And if we have a gridlock Congress, which is what the market's favoring, we've just been going through that for the past 2 years. So why would anything change?
Agreed.
Yeah, I mean, we're all used to this. I'm hoping the rest of the day stays. Like, here's the thing already. I did not think they'd be up 40 today. That's outside of the expected range. The expected range I thought today would be like inside of 20 or 25 handles all day long. I did not think
the volatility contracted the way it is.
Yeah, the volatility contracting, that actually doesn't surprise me. What surprises me is the S&P's up 40 and the NASDAQ up 200. That's a little stronger than I thought we would see today.
Hey, even the Russell's catching a bid too, though. The Russell's up 11. So, I mean, it's all four indices again, which has been rare this year. We've kind of had like a rotation, even the S&P's, NASDAQ higher, Russell and the Dow a little bit weaker, or vice versa.
Yeah, I thought you'd see a Russell. I thought the Russell would, after the elections would outperform, but it remains to be seen. I don't know. I love all the speculation, but up 40 today doesn't make it any fun. I wish it was unchanged and they just pumped a little vol in there and scared all the children. That's what I wish happens. This is a little more.
2 million contracts traded, 0% change in the S&P by the close. Just everyone is just changing hands, nervous as hell.
You could be right. It's funny that with bonds unchanged and on their butt, that now the banks are catching a bid. Goldman Sachs is up 2 and change. Citigroup is up $1. JP Morgan is up. They all seem to be catching a bid with interest rates. Bonds are going lower, interest rates are going a little bit higher. There'll be no cuts. They carry a lot of cash. That's good for their business. I'm surprised that it's taken so long. Maybe they're coming for the pigs.
Well, we're going to have a lot of adjust. We'll have a lot of tweaking to do later on. That's for sure. Okay, Chris, thanks for the info today.